Hello and welcome to the program. Coming up today, UK business activity shrinks as lockdown hits services firms. New ratings by Moody's and Fitch push South Africa deeper into junk status. Plus, Kenya seeks $2.3 billion loan from the IMF to help economic recovery. Well, let's start off today's show with the intraday numbers coming from the major stock markets we track in Africa, where the Nigerian stock market appears not to be moved by the latest hopes of coronavirus vaccines. The all-share index was down more than 1% as at intraday. In South Africa, the GSE index was 1.12% positive at about midday here in Nigeria, and the EGX 30 in Egypt was 0.32% in the green at intraday, while the Kenyan burst saw a 0.94% decline on Friday. And in the Middle East, it's all green at intraday, just like most of the other markets across the globe, with the Abu Dhabi index 0.8% up, while the Dubai FM also surged 1.27% as at about midday Nigerian time. It's not any different in Qatar, where the index was also up 1.24% at intraday, while the Saudi index was 0.16% in the green. And European stocks were also not left out. They climbed this morning as hopes rise that effective coronavirus vaccines will start to be rolled out soon. Ashutosh Pandey joins us live from the Frankfurt Stock Exchange for more details. Good afternoon, Ashutosh. It's been quite a while and it's good to see you back again. Now, AstraZeneca has said its vaccine developed in partnership with the Oxford University has been effective in preventing infection from the coronavirus. How are the markets reacting?
Well, yes, the markets did cheer this development. We saw a lot of trade happen when the news was announced. The markets were in positive territory here in Frankfurt, also in London, in Paris. So yes, it was really a positive development because COVID has been weighing a lot on sentiments for the past few months now, and that's the reason why a positive sign there from AstraZeneca and Oxford is actually a welcome development. The markets see it as the hope to normalcy, if I could say that, because this is the vaccine that is actually being the most talked about. This is the vaccine which has scored the maximum number of advanced purchase agreements, which means this is the vaccine that could actually reach to the lesser developed countries in Africa, in other parts of the world. So that's the reason why there was a positive sentiment in the markets, and also because this is the vaccine that is cheaper as compared to the others, and it's easy to move around, easy to distribute. Distribution was seen as a major problem when it came to the vaccines that have seen more efficacy, more effectiveness from Moderna or Pfizer. So this is a major positive as far as the markets are concerned. AstraZeneca, the maker, unfortunately saw its shares fall. That's because the markets were actually now expecting far more efficacy from the vaccine. They've been perhaps spoiled by the 94-95% efficacy scored by the other vaccines. And had it been any other had those results not come in before, we could have seen traders and investors actually grab even this vaccine with both their hands.
Well, before we get there, Ashutosh, there is a growing clamor for extending the restrictions in Germany. What more can you tell us about this?
Well, yes, for now, the existing restrictions have managed to actually control the spike in cases, but the cases are still high. The infection rates continue to be in uncomfortable territory, and that's the reason why there is a lot of clamor from politicians across the country to actually extend the ongoing restrictions. That means the restaurants and all would continue to remain shut, and the idea for now is to extend these restrictions to till around 20th December. I mean, that's the suggestion that would be made by the state leaders when they meet the federal leadership. And the idea is, of course, to ensure that the cases are go down, the infection rates are down to a comfortable level, so that the restrictions could be eased ahead of the Christmas holidays here, and so that people could actually celebrate the Christmas with families and their loved ones.
Which is what they all look forward to. Now, it's a crucial week for Brexit trade negotiations. European Commission President Ursula von der Leyen has expressed optimism over the talks. How imminent is a trade deal?
Well, it's very difficult to say, but one thing is clear, that time is running out for both sides. And there are actually expectations that we may hear something on the deal front as late as this weekend, as early as this weekend, I'm sorry, because time is running out, and that could be a no deal or a deal. But some clarity needs to be there as soon as this weekend. And that's the reason why both sides would be eager to actually come to the negotiating table, carry on their discussions. The contentious issues of fishing and state aid do remain, and there is a lot of gap in the position of both sides as far as these issues are concerned. But the hope is actually that there should be some announcement on this front as early as this weekend. Britain would be keen to have a deal, and so is the same for the European Union. Britain, all the more because I mean there has been a study that actually says that an impact of a no-deal Brexit could be even perhaps 2 to 3 times more devastating than the impact that the pandemic has had on the economy there. So it's actually a crunch situation, and hopefully we hear something positive on that front as early as this weekend.
We keep our fingers crossed. Ashutosh, thank you. We'll see you again tomorrow.
Thanks.
And let's turn to the UK now, where latest PMI data shows British business activity has contracted in November as a new wave of coronavirus restrictions hammered the huge services. Let's get more details from Juliana Olayinka, who joins us from our London studio. Good afternoon, Juliana. So an early flash reading of the IHS Markit CIPS UK Composite PMI tumbled to a 5-month low of 47.4 in November from 52.1 in October. Tell us more about the data and what it means.
What it means is what we've seen in the spring, which is that lockdown activity has caused large swathes of the British economy to effectively collapse. And I think this PMI really does indicate just how bad the British economy is, bearing in mind that anything below 50 shows a major contraction in business activity. As to be expected, it's really the hospitality sector that has suffered. So bars, hotels, restaurants, anything that has a front-facing consumer service has really suffered under the lockdown. Of course, we know that it will be coming to an end at the end of next week. We're expecting an update from Prime Minister Boris Johnson. I believe he will be giving a televised address sometime later in the afternoon to discuss how exactly Britain is going to emerge out of the lockdown. But unfortunately, of course, any closure is going to see business activity plummet in this country. The only good thing I think economists are taking away from this latest PMI data is the fact that not every sector has been as worse off as they were in the spring when we had the first lockdown on the 23rd of March. Manufacturing, for example, is still seeing a month-on-month growth, and this is really due to Brexit. Brexit is happening in just a couple of weeks' time. We have left the EU, but of course we're going to be leaving that single market in the customs union in just a few weeks' time. And because of that, there have been an excess of orders. But looking into 2021 and the end of this year, the golden quarter, as everybody's talking about, that final fourth quarter, we may perhaps see a double-dip recession, which I believe is what even the Bank of England are betting on.
All right, Juliana, I spoke to Ashutosh about this moments ago, and that's talking about the great news coming from British pharmaceutical giant AstraZeneca today, saying a coronavirus vaccine developed with the Oxford University can prevent 70.4% of people from getting COVID-19 and up to 90% if a lower dose is used. But how much of excitement does this news bring in the UK where you are?
Well, of course, you can imagine it's brilliant news, especially before Christmas. Again, as it was last week, Christmas is trending on British Twitter. This is a huge announcement, particularly, of course, for Boris Johnson's government. I think this Oxford AstraZeneca vaccine is our best hope in trying to inoculate the entire population, or at least 50 million individuals before spring, so that life can start coming back to normal again. Apparently, the dose will cost about £2 per jab, which I believe is about 1,000 naira here. That's seen as really, really cheap, same as the price of a cup of coffee. And what Matt Hancock, the Health Secretary, did say to the media this morning is that they're expecting at least 2 million doses to be given just before Christmas, and then a further 50 million by spring next year. There are two statements, one from the Health Secretary, Matt Hancock, saying we are hoping to start vaccinating next month. The bulk of the vaccine rollout programme will be in January, February and March, and we hope by Easter things will start to get back to normal. The Prime Minister, Boris Johnson, has also released a statement saying this is incredibly exciting news. The Oxford vaccine has proved so effective in trials. There have been a lot of comparisons, and as you say, that headline figure of just 70%, it is up to 90%. So they have found that if you give a dose 1 month and then give a dose in 4 weeks' time, then in 9 out of 10 patients of the 26,000 people they tested it on, it did remain positive. So this gives great hope. Also, if you compare it to Moderna and the Pfizer-BioNTech vaccine, I believe those vaccinations have to be in sub-zero temperatures. With the Oxford AstraZeneca vaccination, this can be stored in just a normal fridge, and it is seen as, being much cheaper. So, no, this is incredibly brilliant news. And again, we are expecting a statement from Prime Minister Boris Johnson anytime now about it.
At least something to cheer everybody up this time around. But tell us, how are the markets reacting to this news at intraday?
The market's doing pretty well at intraday. The FTSE is climbing high in the red in the currencies market as well. The British pound is doing very, very well against the dollar. I've got to say, surprise, surprise, AstraZeneca, believe it or not, their shares are down about 1.5%. I've been searching and screaming, and so has The Economist. No idea about why that is the case. But the FTSE really is rising due to oil stocks. We know we've got an OPEC Plus meeting next week. Brent crude has recovered some of those lost gains throughout the year. BP, Royal Dutch Shell, all up between 3.6 and 3.7%. Also, as well, there has been a rally in travel and tourism stocks between 3.5% and 9%. We've seen a huge jump, and that's because the Transport Secretary Grant Shapps, along with the lockdown measures being reduced next week, we are expecting some sort of announcement about the reduction of quarantine. At the moment, I believe it's between 7 and 10 days in Britain if you are not coming from one of those safe corridor zones. That's due to change, and we're expecting an announcement anytime soon. So we saw a huge rally there. But the FTSE All Share is up 0.35%. The FTSE 100 is up by 0.33%, and the FTSE 250 is up by 0.41%. In currencies, the British pound is up on the US dollar by 0.54%, up on the euro by 0.24%, and up on the Japanese yen by 0.41%.
Thank you, Juliana. We'll see you again tomorrow. And stocks in Asia were also up today as investors continue to watch for developments in coronavirus. Mainland China's stocks were higher, with the Shanghai Composite up 1.09% to around 3,414.49, while the Shenzhen Component gained 0.743% to close at about 13,955.28. At the final trading hour, Hong Kong's Hang Seng Index recorded little change. In Australia, the S&P ASX 200 rose 0.34%, ending its trading day at 6,561.6, and markets in Japan were closed on Monday for a holiday. Still to come on the program, an analysis of the latest credit ratings downgrade of South Africa. To join us again. Welcome back. Global ratings agencies Fitch and Moody's Investors Service have downgraded South Africa's credit rating further into junk status The cut by Moody's takes South Africa 2 notches below investment grade status, while Fitch brings it 3 levels below. Both agencies also maintained negative outlooks, which means the next move will also likely be down. S&P also rendered judgment on Friday, maintaining its junk rating with a stable outlook. The country's finance minister, Tito Mboweni, describes the move as painful, saying the downgrade will not only have immediate implications for sub-borrowing costs, but also a constrained fiscal framework. But let's talk more about this with the Associate Practice Lead at Docker Frontier in London, Matt Kinniger. Good afternoon, Matt. Thank you for joining us on the program. Now, South Africa's public finances were already in a weak state before all of this now. So what will this latest downgrade mean for government spending plans through 2021?
Well, thank you for having me on the program. Yeah, so this is certainly not positive development for South Africa's public finances. It basically means it will be harder for the government to achieve its fiscal aims next year without increasing taxes quite significantly, because it will probably find it very difficult to cut spending. The budget deficit is forecast to shrink slightly next year, but at close to 9% of GDP, it will still remain very high. So significant fiscal pressure exerted on the government. We are still expecting the government to overall be able to increase spending in 2021. But there will be significant differences between government departments. We expect health and social care to receive real terms increases next year, but every other government department will face very tight budgets. We're expecting procurement budgets to fall quite significantly next year. One thing that will probably not happen is significant cuts to civil service wages. These will be extremely unpopular, and there will be a lot of resistance within the ANC to those cuts.
Now, the finance minister, Tito Mboweni, has himself stated that his country's economy urgently needs structural reforms. Are these now any more likely?
I mean, it's a great question to ask, because South Africa has needed structural reform for a very long time. And one would hope that the latest downgrade would potentially add more impetus to the structural reform process. I mean, it could result in a quicker overhaul of Eskom, although this is unlikely to occur in 2021. We could see more pressure on the government to begin to privatize some state-owned enterprises that are really failing to perform, for example, South African Airways. But again, this is quite unlikely. What is more likely is that public finances will need to get substantially a lot worse before there is sort of meaningful, significant, widespread structural economic reform in South Africa. So no major change for the next year or so in our view.
Finally, Matt, South Africa has endured an unprecedented economic contraction in 2020. So what are the prospects for a recovery next year?
Yeah, so the economy is expected to grow next year. So we're forecasting a growth rate of around about 4 or 5% year on year, which sounds quite good. But compared to the anticipated contraction of around 9% for 2020, it's actually not particularly healthy. So generally quite weak growth in 2020. It could actually turn out to be weaker than the 4 or 5% that we're forecasting, especially if the lockdowns in Europe that we're seeing at the moment last longer, well into 2021. South Africa is quite exposed to Europe when it comes to exports and investment, so that is a downside risk. But I would note that there is likely to be significant variance between well-performing industries in South Africa next year and the weak-performing industry. So tourism, consumer goods, hospitality likely to perform extremely poorly early next year. Construction, especially public sector infrastructure projects, very weak in 2021. But we are expecting to see mining, agriculture, IT, tech, and public sector healthcare performing much stronger than the rest of the economy in 2021. So although quite a weak view overall, there will be some sectors that will continue to grow next year.
Associate Practice Lead at Stock Frontier London, Matt Kinniger, thank you for joining us on the program today. All right, we'll move away from South Africa now to Kenya, where the government is seeking a loan of as much as $2.3 billion from the International Monetary Fund under the Lenders Extended Fund Facility to help with economic recovery. The Extended Fund Facility was established to provide assistance to countries experiencing serious payment imbalances because of structural impediments or slow growth and an inherently weak balance of payments position. According to the National Treasury Cabinet Secretary, Ukur Yatani, talks on possible 3.5-year loan program are expected to conclude early next year, with Kenya eyeing an initial disbursement of about $725 million in the fiscal year that runs through June. Mr. Yatani also stated the need to raise and conserve funds as part of a plan to support sub-Saharan Africa's third-largest economy after the pandemic hit public revenue and further clouded plans for fiscal consolidation. Let's talk oil prices now. They actually extended gains in early trade today, and that came as traders eyed a recovery in crude demand thanks to successful coronavirus vaccine trials, although prices were contained by renewed lockdowns in several countries. Sentiment was also boosted by hopes that the Organization of Petroleum Exporting Countries, Russia and other producers, a group known as OPEC+, will keep crude output in check. Brent crude futures rose 0.5% to $45.17 a barrel, while US WTI crude gained 0.2% to $42.52 a barrel. Now, both benchmarks jumped 5% last week. OPEC Plus, which meets on November the 30th and December the 1st, is looking at options to delay by at least 3 months from January the tapering of their 7.7 million barrel per day cuts by around 2 million barrels per day. And gold climbed higher in early trade today as softer dollar and hopes of further U.S. monetary stimulus to cushion the pandemic-hit economy offset optimism over the possibility of a COVID-19 vaccine rollout next month. Spot gold rose 0.2% to $1,873.51 an ounce, while gold futures were little changed at $1,871. Other metals, silver firmed 0.5% to $24.25 an ounce. Platinum was up 0.1% at around $946.43, while palladium gained 0.6% to $2,339.56 an ounce. And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.